Hi, everybody. This is Dr. J coming to you live from Eastern Long Island, where the weather is a little cooler and a little more comfortable than yesterday, but it's still a pretty hot one. I think it's projected to be about 82 degrees for the highs of the day. That doesn't sound too bad, but it can still be pretty hot. So today looks like another beach day. For those of you that are so inclined, the eastern seaboard, maybe a little swim in the ocean is in line. Let's take a look at those who need a refresher due to the Dow being down so far this morning. Let's take a look at the Dow, and there's been some interesting comments as to the direction of the Dow, so let's get to it. Okay, here we go. So what have we got here? We've got my Twitter page, which isn't really what I wanted to share. What I want to share is a graph of the Dow. There we go. Okay. As you can see, we've broken through the upper trend line of the Dow Jones since the January highs of 26,616. But we have not made a higher high. The higher high we're talking about is the June 11th high. The June 11th high was 25,402. We're well below that. In fact, I wouldn't be shocked if we topped yesterday at 25,200. So I know we've gone through this trend line, but we haven't made a clear break of this trend line, nor have we closed above the 25,400 level. So where the Dow is headed is unclear. Dennis Hartman said, I don't know if he has a strong opinion on this, but he's looking at this area as a period of consolidation off the January highs. So if that's what this is, a period of consolidation, well, it's very much what I said as well, that it's coming. The Dow is like forming a triangle, and the apex of the triangle is soon upon us, and it will have to break one way or the other, up or down. If it's a continuation pattern where this is consolidation, then Dennis Hartman is absolutely right. We're going to get a stampede, a close above here, which should indicate not a bull run, but a stampede, and that stampede could take us to 30,000. Just as Dennis Hartman said it could. And Zero Hedge actually has the same graph that I've been showing you for weeks, this period of consolidation, to illustrate Dennis Hartman's feelings on the market. Yeah, but also there's some other interesting things. For those of you who are big pattern followers, it looks like you could make a case that we're having a head and shoulders pattern form. Left shoulder here, neckline, left neckline here, head here, bottom right neckline here, and we just may have formed the right shoulder. If so, then a test of this neckline could see the Dow plummet to the 20,000 level. So one thing's for sure, we're in a period of coiling, if you like, where the Dow is being caught, tightly wound between the lower and upper trend lines, and like any spring, should come out of this triangle sharply upwards or sharply downwards. My gut feeling, and I told you this weeks ago, my gut feeling is that we would top somewhere between 25,000 and 25,400. Right now, that would mean that yesterday would most likely be the high for a while, and then we would retest this lower trend line, maybe put in a new low below the June 28th low of 23,997. So if we put in a new low, we're going to have to see, will it bounce again off the lower trend line and have one more shot at upper trend line before it comes back down and through, entirely possible. So the third case that we didn't really mention is that it continues in this pattern between the two trend lines for some time. And that can happen right through. Look at, if we extend this, we see that it could keep going until the two lines form an apex, which is somewhere around here, somewhere around October 15th. So it's conceivable that for the months of July, August, September, about 3-4 months, that we could just be going upper trend line, lower trend line, 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 until we finally break out of it. Or we could break out at any given time, including today. If the Dow turns suddenly to the upside, takes out the high from yesterday, that would be confirmation in my mind that we have broke the upper trend line and will probably break the 25,400 mark. And then who knows? Then we're no longer in a bull market, we're in a bull stampede, as I said before. So you can make a case for the bull, you can make a case for the bear, you can make a case for a head and shoulder pattern. That's why I drew this line connecting the neckline of the head and shoulders pattern that may be forming here. Or you could say that this looks like a potential double top. There's a lot of things you could say as a chartist, but the bottom line is probabilities. Is the probability higher that the Dow goes to 30,000 before it gets to 20,000, or 20,000 before it gets to 30,000? And I think the probability is higher that we visit 20,000 before we visit 30,000. But that's just this pundit's opinion, and it's not costing me 2 cents to give that opinion. So I would take all opinions with a grain of salt and check with your investment advisor before acting on anyone else's opinion. Do your own due diligence. You're the smartest guy. You're the one who should make the decisions to how you spend your money, nobody else. I don't believe in giving my money to anybody else but me to invest. Win, lose, or draw, I'm in charge of my investments, and I like it that way. I don't want to trust anybody else unless I have a full understanding of the direction that person is going. And even then, I'd rather direct the investments myself. But that's just me. If you feel comfortable with an investment advisor, by all means. If they've been successfully for you over the years, by all means. But ultimately, you're responsible for your own investments. Don't blame your investment advisor if things go sour. You're the ones that should understand what you're investing in, what the risks are, and always understand that there's not a sure thing in the stock market. There's only probabilistic odds of success. And that's all I'm saying here. I think the probability, considering the length of time that we're in this bull market, is that it has to end somewhere. Maybe it ended in January, as far as the Dow goes. So it's yet to be determined. It's totally unclear. But again, my opinion, just my opinion, is that we're more vulnerable to the downside than we are to the upside at this point. That's all for now. I hope to be back later with another segment of Dr. J at 11, this time talking about something other than stocks. I have a lot of interests. I hope they coincide with yours. And let me get out of the chart for a moment and get back to stop screen sharing and get back to you guys. All right, this is Dr. J at 11 wearing his Yankee cap. Looking forward to the second half of the baseball season for the New York Yankees, hoping the Mets get it a little bit better for the second half. So we'll see what happens in baseball. Let's go Yankees. Let's go Mets. Adios, amigos, and best of luck to whatever baseball team you're rooting for. Bye. See you all tomorrow or maybe later today.